Good evening, ladies and gentlemen. Today is the 7th of April, one day before the expiry. It's also a Wednesday. And we came into the market in the morning with a lot of anticipation of news from Shaktikanta Das. And the RBI governor did not disappoint. He more or less gave the market exactly what they wanted. Sounded more dovish than probably the market expected as well, which led to a little bit of short covering on the bank Nifty. Overall, the nature of markets lately has become very volatile but in very tight ranges, which can be stressful if you're an intraday non-directional trader. But that being said, the day was all right. I think by closing managed about 2%, and also I'm taking a relatively lesser risk reward spread right now due to having increased my position sizing slightly. The day was manageable but definitely tricky, and at many points people would have got stopped out if they were doing non-directional trading. That being said, lately there has been a little bit of randomness in the market, but overall what the data is suggesting is that a lot of people are carrying home the 14,800 and 14,850 short strangles. So that being the case, tomorrow should be an interesting expiry. Premiums are quite high as well going into the expiry. So I hope you had a good trading day, and I will catch you tomorrow. Thank you so much for watching. Have a great evening.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. So today's trade plan, being 7th of April, will be that we look at the past 3 days in conjunction 14,900 where there is supply, and so yesterday we saw 14,550 there is demand, but overall if we look at the past 3 days, even after this sell-off, around 14,450 there seems to be good demand. So we will be strangling this range. Options premiums are still quite high due to the RBI event, and if it turns out to be a non-event, as most events have been lately, then we should see a good amount of decay, considering that we're trading options that are expiring tomorrow. Reliance is opening just under 2,000, and in fact exactly at 2,000, and Bank Nifty is opening at 32,500. So not expecting too much movement there unless there is some kind of a big trigger from the RBI event, which seems unlikely, or there's some kind of short covering that is then triggered. Bank Nifty is looking weak, yes, but if you look at it, so Bank Nifty clearly downtrend, but at different points we're seeing that 32,500 is finding demand. So while most people would want to short Bank Nifty, and that might be the best trade in this scenario, I would think if the horizon is just slightly longer, then it's probably a good time to start adding. Bank Nifty is taking support at these levels. Regardless, the idea for today's triangle is quite straightforward. We're going to enter this triangle and risk manage it appropriately through the day and try to capture some amount of decay, considering that this is tomorrow's expiry. 2 minutes till market opens. We'll wait for market to open for a minute or two and then enter a position. We'll keep you posted. Okay, I've just entered the position. We saw a dip in the morning, and that dip got bought, so tried to time the entry by entering the 14,400 put and the 14,450 put after. Now this is a very good amount of premium in this triangle. So given that we have 450 points and currently it's trading at something like 60, is quite incredible. That's a lot of points considering tomorrow is the expiry. So options premiums are quite high. We entered this position and set up preliminary stop losses of 48 on both. This is just in case there's a big move. The idea will be to, as much as possible, not let stop losses hit and manually exit orders where required. So having a lot of issues with slippage. So have entered on this account as well as this account. I'll be showing you, for the purpose of ease, just one of the two accounts, and yeah, more or less in line. I don't generally watch the news, but today I'm going to be watching the news to listen to any commentary that the RBI governor has, and in case it's something out of line, start cutting position. But yeah, very good amount of premium available, but there is an associated appropriate risk. our risk tolerance for the day will be about 10 points. So in no situation will we let our damage for the day exceed 10 points. That's the plan for now. Okay, just to go over what will be the adjustment plan. Basically, this is yesterday's high, this is yesterday's high, but this was the yesterday's swing high. And if we start heading here, then we'll have to correct on the call side, because right now if you see the spacing, the fear of the market is definitely on the downside. These puts are 300 points away and these calls are just 150 points away. So the idea will be, in case we start making that up move, we start heading to 14,800 and basically have to break this line. When this line breaks, we'll move away half our calls and move our puts to 14,500, half of them. In case we hold above this for 15 minutes, then we will move up all the puts to 14,500 and move all the calls to 14,950. So one thing to be watchful of is this strength in Reliance now over 2000. If volume starts building here, currently it's being compensated by IT and Bank Nifty isn't really moving, so that is not too much of a concern. But if Reliance makes a 40-50 point move, that should start pushing Nifty towards 14,800. The other thing is there's a huge amount of OI build up at 14,800 on the call side, which is why one would think that level should be defended. But if Reliance shows a lot of strength and is suddenly joined by Bank Nifty, that could lead to a big up move and then big short covering that could act as a massive short covering. There is good news for Reliance today, some spectrum purchase or whatever, but yeah, some amount of strength in Reliance for now. Okay, had to risk off on the call side because the strength in Reliance continues to be there and Bank Nifty now potentially joining in as well. So moved up the calls and for now just moving up the calls, not moving up the puts. We'll wait for 14,800 to get tested to consider start moving up partly and then all of the puts. So premiums are very high. The governor's speech should start anytime. So yeah, time to wait for the event and see what happens. The next adjustment will be if we make a clear break above 14,800 on the upside and hold there for 15 minutes, we will see what to do with the calls. But until then, nothing in an urgency. We have stop losses at 38 on both legs. Okay, just realized that my mic settings had reset to default, which is why the quality of my voice in the earlier clips might be quite substandard. Should be fine from now. So RBI governor is done with his speech, more or less a non-event, and that has led to some amount of decay in the premiums. Doesn't seem to be any reaction as such. Taking a look at the OI data as well, large amount of put writing now at 14,800. So more or less a very comfortable position. From the put side, we are 280 points away. From the call side, 170. And that strangle is giving us about 43 points. So we're going to continue to hold this more or less till the end of the day. We will wait for a good move above 14,800 to make any adjustments, or wait for a test of 14,700 to make any adjustments on the downside. So yeah, more or less a non-event. Very, very, very diplomatically correct and situation wise speech by the RBI governor. Basically reassured the bond markets that there will be continued accommodative stance for a long time. And yeah, no changes in any of the interest rates, absolutely nothing noteworthy as such. So yeah, we're back to our trade that has let off some of the IV. It has let premiums to come down and we continue to hold this spread. Okay, so we continue to hold range, and what I've done now is I've moved up the 14,500 put to 14,550 and I moved down the 14,950 call to 14,900, because now that so-called event concern is over and premiums still continue to remain high. This set would have had something like 41, 42 points, but rather have moved the strangle closer. So increase the risk reward by 100 points by reducing the strangle width. So this gives us much higher decay potential, but obviously directional move also exposes us to certain risk. But this is the change that we made. We have open SLM orders to manage any kind of rapid move if we do see one. Yeah, everything else about the trade will remain exactly the same. Okay, seems to be some kind of a late reaction to the RBI policy, but a big up move above 14,800. Have had to move the puts up to 14,700 to manage that and move the calls away to 14,950. And basically, market had a heavy put side bias, and that bias went completely wrong. And nobody was expecting 14,800 to get taken out as easily, but it did. Big move on the bank Nifty, pulling it towards 33,000, and on Reliance as well. So from the open, a good 40 plus points on Reliance. So that being the case, since the market's bias was wrong, calls were really cheap, puts were really expensive, puts really crashed, and the calls really expanded. So to deal with that, had to move up the calls and move up the puts as well considerably. Now we are in a 250 point range, 100 points away from the call side, 150 from the put side, and that strangle is trading at something like 76. So this is what our position is now currently. The idea will be if we start breaking 14,900 on the upside, we will have to really scramble from the calls, because we might see a short covering rally, and that can realistically take us over 15,000. It's very possible. So that's more or less the plan. Stop losses on the calls are at 51. So going to try and manage from here for now. We're most likely seeing massive short covering. You'll see that a lot of the OI 14,800 call would have come down. We'll be able to see that in a minute or two. Anyway, we'll keep you posted. Time is 12 o'clock and we are now seeing a slight dip. My idea is that 14,800 will now act as a support. If anyone who's gotten short here and gotten trapped, I don't think we would very easily let them go. That's the thought process for now. That being said, the 14,700 puts have now slightly started to expand, but not by a lot. The 14,950 call has come down considerably. So we will wait for a test of 14,800 and then risk manage the put side by potentially moving down to 14,650, but nothing as of now. So one more thing that's evident is a lot of new short straddles being written at 15,000 in the monthly, and we're seeing good amount of support on the 14,800 put. So 14,800 becomes a very good expiry situation. Looking at now, both call sellers and put sellers would be happy with that. But yeah, for now we're sitting on this triangle, which still has 70 points in it, but is slightly bullish in its view. So we're going to hold this until we test 14,800 and don't need to be in a rush to risk manage the put side yet. Okay, the time is 1 o'clock and we're now seeing this move here. Mainly came from the bank Nifty, but now IT is starting to participate. Reliance, after heading above 2040, has now taken a back seat and doesn't have any movement as such. But what's happening more or less is these calls are at threat of expansion. They're only 85 points away at this point, and one option is to move up partly, maybe 1/4 or 1/3 of the puts to 14,750. That's the one I'm considering for now. It never feels good moving up your puts towards the high point of the day, but yeah, that's a consideration. So if this starts expanding to 40, about 1/4 or 1/3 of these puts will have to move up. This should be pretty good resistance towards 14,480. That's acted as a recent top as well twice. So we've seen this kind of behavior at this zone. Now the question is, are there enough shorts and do enough of them get scared to push it up? So yeah, because of that fear, more fear than anything else, these calls are quite expensive now, and we will just hold on to this position as is until these start expanding to 40, and even at that point we will move our puts in a staggered manner, not be in a rush to do it. So that's the 1 o'clock update. I do have, in case there's a big green candle, 500 point candle on bank Nifty or something, stop losses are at 45, 46, 47, 48. So that should more or less protect us against some kind of move like that. But yeah, for now we continue to hold this 250 points triangle. Lately, in the expiries that we're seeing, a 250 point strangle should not have more than 40-45 points tomorrow at open. So that is means this should decay considerably if we stay range bound. And even if we make a 20-30 point move here and there, it should still give us very good decay for the day. So the ideal, we continue to hold this position and trail the stop loss as the day goes on. Okay, we saw some very erratic moves on the Nifty. What had to do was, okay, so here we look like we did make a new day's high, so we went to 14,882, but should expect selling pressure, and immediately saw an 80-point candle pulling us down to 14,800, which seems to be the preferred expiry spot for tomorrow, given all data at this point of time. To manage that, had to get out of the put side, so exited the 14,700 puts and the 750 puts, which unfortunately had to move to protect this upside breakout, which seemed unlikely, which is why it moved only 1/4 of the puts up. But regardless, the downside cascade crashed these calls from like 40 plus to under 30, a matter of no time, and also expanded this 650 puts, so might as well switch there rather than being imbalanced. We're more or less at break even at this point, so between here and here we are more or less at break even. And the idea will be to not get caught by any further volatility. That's why we have risked off by expanding the range of first triangle, and there's another 2 hours left to go, so possibly capture some decay in that period. So far the up move and the down move have more or less, because of our adjustments, taken away whatever we could have made during the day, but that's fine. We have to correct, and we cannot have an overly biased view, especially not at a point where I have increased my capital size, not comfortable with taking much directional risk with a larger position. So it's fine, we'll take some time to transition. Anyway, 2 hours left to go, we'll keep you posted. Okay, cascade all the way till 14,800 and a slight bounce back to 14,800. I'm using to actually move down the calls. So even though there's a bounce, I'm moving it down because now there's not much time left for market close, less than 2 hours. And I don't want to take a heavily imbalanced position. So right now our puts are considerably far away, 150 points away, calls are just 100 points away. We'll keep it this way, and the next step is if we head back above 14,800 and head above 14,820 and hold there for 2 candles, about 10 minutes, then we will move up the remainder of the puts back to 14,700. So that's the plan for now. Overall, now we're finally starting to see this triangle as a set lose some value, so that's encouraging. But yeah, we're seeing random volatility of 30-40 points. It's very fast. The candles are very large. The width of a 5-minute candle is almost 40 points back to back. So that being the case, quite balanced, and we'll continue to hold this balanced position for now. Okay, so right now, once again, had to move the calls back up to 14,950, and a few points up, like 3 points, but more or less on charges and everything, slightly better than break even. Okay, what is happening? See, it's not that the markets are moving a lot. It's just the way that they are moving that is the problem. The way we fall, it feels like, okay, there's going to be some kind of a big cascade, and you correct for risk, and there is an immediate reversal with an equally strong magnitude. So it's not that there is volatility in the markets that there is a problem. It's how the volatility is playing out that is the problem. So invariably we are now getting played. So the idea will be to be a little averse to making changes to the position unless absolutely necessary. So what will that translate into? Basically, we need a new high for the day to make another adjustment, or we need to break this swing low of 14,780. 14,780 on the downside or 14,880 on the upside. At that point, we'll adjust. Otherwise, we're just getting played left, right, and center. We adjust for the put side to call gains 10 points immediately. Yeah, just for the call side, put gains 10 points immediately. It's the nature of volatility that's more important here. And I'm starting to think perhaps straddling would probably be a better idea if markets continue, not today or tomorrow, but if this continues to be the nature of the market, wherein we are making up down moves around a pivot, then straddling would probably be a better approach. Regardless, we have an hour and a half to go, and we are now sitting on this 300 point triangle, which still has 47 points in it. So we'll continue to hold it. Premiums are good. Some form of decay has started to set in, but premiums all said and done are still quite good. IT is making a kind of move now. I don't know what happens here, but generally around weekly expiries, IT tends to move. Yeah, okay, right now the rupee has weakened against the dollar, fair enough. But Bank Nifty holding firmly 33,000. Reliance is just holding barely above 2,000. Intraday 40 point plus up move and then completely sold into eventually. But IT now taking over the reins. So regardless, not too concerned with too many things happening right now. The straddle itself is worth 46, 47 points. If it heads to 50, I'm exiting the position. That's more or less plan. Okay, 1 hour left to go till market closes. We're still sitting in the same 300 points triangle, and it continues to have more than 40 points for now. And looks like overnight a lot of people are carrying home the 14,800, 14,850 and even 14,900 short strategy, which is interesting because we are 70 points away from 14,900. But in the meanwhile, we continue to sit on this, and the whole last hour will be basically trailing the stop loss on this. So currently if it's trading at 42, 43, our stop loss will be somewhere like 46, and we keep trailing it. And unless there is something drastic which pushes us out, we should be more or less comfortable to hold. Considering that tomorrow is expiry and there's a 300 points triangle, it should not have much value in the morning, not more than 30 points. Okay, 12 minutes until we get auto squared off. Basically, at one point we moved up our puts because these calls had expanded till 30. And yeah, basically a day of getting played by the market on either direction. Currently up something like 8 points or so. And the idea is we'll just trail this. Currently this triangle is not worth very much. It's about 46. If it heads to 48, we're exiting. So about a point and a half if we lose from here, we'll be exiting. So we have both our positions. More or less okay outcome for the day. Straddles would have done much better, but that's if you look at the context of this week. If you look at a 3-week context, straddles would have been much harder to manage. So yeah, these random 50-point moves and then complete negation, or like 30-point up move followed by 60-point down move, it's catching us off guard. We have exit orders ready. The last 10 minutes, 15 minutes can be very, very good DK, especially one day before the expiry. It will also show you biases in the market that are building up. So you can see if people are doing BTST on any particular strike. It'll become evident in the options pricing itself, if there is any such thing. But anyway, we're going to trail close to the end, and more or less from a mark-to-market situation, if we start heading back down to 2 lakhs on a mark-to-market, we will be cutting out of the position. Otherwise, we can maybe capture another 2-3 points easily. Okay, good enough. Time to exit. 4 minutes till we get auto squared off. So I'm gonna get slightly cheesed on the put price. I'm sure of it. Yeah, I'm guessing easily a point of slippage. Yeah, more than a point of slippage. But fair enough. Here as well. Why am I getting rid of the puts first? Because we're seeing a red candle, and don't want that to cascade out of control. Okay, so ended up 1.76 here and 2.23 here. Have to still get rid of the hedges. Okay, so ended up 2.23 here and 1.76 here. So we can say we ended up about 4 lakhs for the day, which on the capital used is more or less close to a 2% return. But yeah, after charges should be something more like 1.75.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.